Thanks for tuning in to the first episode of The House, where we're going to dive headfirst into everything real estate related. Today we invited a special guest for our first episode, Sal Rizzolo from Cardinal Financial. I've known Sal for a while now, met him actually in the barbershop, and ended up now doing loans with him. I'm an assistant with Sal over at Cardinal Financial as well, who helped me really get a good knowledge and background of mortgages. And that really definitely helps our clients when we're going out there fighting for them for their offers when everything is crazy in this market right now. So introduce Sal from Cardinal Financial.
Thank you, Josh. I'm happy to be here.
Yeah, let's talk a little bit about your background, what really got you to where you are now. Where'd you start?
So I bounced around a little bit personally. I didn't know exactly where I was going to go. So like Josh said, I started cutting hair when I was 16 years old. I used to cut my now boss's hair for years and years, and I never knew exactly what he did, but he ended up being, he ran a mortgage branch. So around like 26, 27 years old, I started working for him, and I was still cutting hair. I started working for him. The interest rates went up. I started doing real estate. We kind of sat down more intensely when I started doing real estate.
We met a lot when you were cutting hair still full time.
Right.
I was getting haircuts at the same barber.
Right.
And as I'm sitting in the chair, you were across, and we would talk mortgages as I'm getting hair, and you were cutting someone else. Yeah. We would kind of just be having our own conversation, and then went from doing cutting hair and then mixing in hair and real estate, and you were a realtor.
I was trying to do both. So in 2016, when the interest rates went up at the end of the year, the mortgage platform that I was on was predominantly refinance. So, there wasn't really any money to save people anymore. So unless you were very well versed in, in cash out refinances and saving people money, even with a high interest rate, which at the time I wasn't, I decided to start focusing more on purchase business. And I was the first person that people came to. So the question was always, can you help me find a house? And I would say, no, but my friend can. No, but my friend can. And then I would do their mortgage. But I figured, why not help them find the house? Right. So if I find them the house, we would handle the mortgage over at United Mortgage. It would, would go through somebody else, but at least the business stayed in house, and we were able to build a business together.
Right.
And then, I went from I was cutting hair full time and doing real estate full time.
I know. I remember. I'll never forget the first time I came in and I saw you. You were cutting hair, and you had, I don't even know if you were wearing.
That was the Bluetooth headset?
You would always have a Bluetooth. You would be talking to somebody 24/7.
Yeah.
But you were dressed up like to the T. You weren't looking like a barber. You had $1,000 shoes on. You're like getting ready to run out the door.
To an appointment. Yeah.
And you would literally, this guy would get out off the chair, pay you, and you would run out the door right behind him. Yeah. And I gotta go. I gotta go show a house.
Sometimes it would be him that I was showing the house to. Listen, we'll group it together. I'll do we'll do everything.
I'll never forget that when I saw you dressed up like that. You were cutting hair all day, then you would run out, show houses, and then literally run back to finish your clients.
But you were doing the same thing in the restaurant business.
Yeah, well, my difference was I was running into the bathroom to answer a Zillow phone call to take a possible lead. Meanwhile,
everyone's looking for you. Where are you? What's he doing?
Yeah, it's very tough to do. Obviously, two jobs or three jobs at once.
And then every time the phone rings, I get someone that's calling me about a mortgage, and I'm discussing their interest rate with them, and they hear the buzzer, and I'm like, oh, I'm sorry, forgive me, I'm just getting a haircut. My clients must have been under the impression that I had the freshest haircut.
You were getting a haircut every day,
every single day, and I would make sure, I would talk to those clients once a day, and I would make sure that was the excuse I used. I didn't try to use it twice a week, but that was really it. I didn't want people to know that I was cutting hair in my sweatpants while their mortgage application was moving through.
Right.
At the bank that I worked at. And, the only reason I was able to do that, and it seems like you have a similar setup, was that, we had a team behind us and we had other people helping us with the transition. Because if you think that you're going to go from, your bread and butter and your full-time job into whatever else you're going to do, and you're going to half-ass either one of them.
Yeah, it's never going to work.
You can't.
Do you think you would have been able to do it without having a team involved? For me, obviously to grow, you need that backbone, and your team's like your backbone. If you're busy, eventually you're going to have more than one client at a time.
Right.
And you want to be able to give everybody everything they need at the same time also.
Right.
So without having your team, would you have been able, you think, to do both?
No, I would have been dead. But we knew too, as we were building, my business was coming from the barbershop. So I was going to the office and learning about the business and taking that and bringing it back to the barbershop and shoving it down my customers' throats. They were so tired of hearing about mortgages and interest rates, but I haven't, very, very rarely do I jump on Facebook and see like someone who I used to know or someone who I used to cut, like, oh, we bought a house. Like
they're all coming to you.
Come to me. So it's, it worked out. And I remember being afraid of leaving the barbershop. That's,
Did you think you were going to lose, like as soon as you left the barbershop and went full-time mortgages, that you would lose that business?
Yeah, it definitely did. And I remember, I don't even know if I told this story last time, but it was a Thursday, and I had like something like 50 appointments lined up for the weekend, Friday, Saturday, Sunday. I used to get to the barbershop at 8 o'clock in the morning on a Friday. I'd leave at sometimes 1 in the morning. My clients didn't care. They would do whatever they had to do to get a haircut. Some of them worked overnights. So I worked Friday, all day Saturday, and then I would leave early on Sunday so I could pick up laundry and breathe a little bit. And then,
so you could eat dinner and get ready for the week.
and get ready and do the same thing all over again. And I remember someone asked me if I could show them 2 houses on Saturday, and someone else asked me if I could list their house, then someone else told me they wanted to meet their mother because she was taking out a mortgage, and all of this was supposed to be for the weekend. And I remember looking at all of my clients, like in the book, and then looking at this and just making the decision like right there.
Yeah.
I cut hair for 15 years, and I sent out a mass text and I said,
done.
I said, I'm really sorry to everybody that has appointments booked this weekend. I'm not going to be in. And I really appreciate everything that everyone's done for me over the years. And then the messages that I was getting back was like, that's okay, moving to next weekend. And I'm like, no, I don't really think
there is no next weekend. There's no next week.
We're actually leaving. And I can only imagine that what I experienced for the next year after that is what like a drug dealer feels like. Like the people were calling me like, I'll come to your house. I'll do whatever you need me to do. Can you take me on Wednesday? I'll pay $100. Like, please, I've been coming to you forever. And I'm like, if I say yes to this person, I gotta say yes to that. Yeah, and then so I took the chair out of my house. I gave up the chair at the barbershop, and
so from that day there was like basically no turning back.
There was no turning back. And,
were you still doing were you still being a realtor though at that time and trying to mix in mortgages and real estate? Or were you really full-time?
No, at that point I just gave up the barbershop, and I was still dancing back and forth in between real estate and mortgages. And
so I guess when did you go full-time mortgages? When you decided, okay, this is no more real estate, like I'm so busy I really just have to concentrate on the mortgage side.
Yeah, see, so real estate and mortgages, it's a similar structure. I mean, you create your own business. You decide the company that you work for and what this branch provides for you or what this business provides for you. And I remember my boss telling me, and anything that my boss tells me, I take as gospel because I see where he
got to now.
Right. So, even if I think for a second, like, no, it doesn't have to be like that. It could be some other way. Like, he told me, he's like, you can make $100 doing 3 different things. You make 100, 100, and 100. But if you focus all of your energy into one thing and it's a scalable business, he's like, I don't want to lose you in the mortgage industry. He's like, but you need to pick one.
Right.
And he never gave me an ultimatum, but he was just telling me that.
You kind of put in your head like, if you want to really be the best at one thing rather than be average at 3.
So, so then we sat down and I said, listen, if I can run a branch and I can have the opportunity to expand and do what I want, and at the bank that we used to work at, that wasn't an opportunity because it just wasn't set up like that.
Right.
When we moved to Cardinal, that's
you were able to scale and
be
your own branch manager, and now you have your whole team behind you.
So that's why, like, I think it's invaluable for realtors to understand the mortgage side of things, and that's why, aside from having you and Laura at Cardinal, I want to start doing, lessons or
it's a
or
huge
educational.
It's definitely worth it. I mean, having the knowledge of mortgages that I've learned from you, just as we've been doing it every day.
Yeah.
It's a world of difference between if you put myself as a realtor with my experience compared to another realtor that's been in business for the same amount of time, how much or longer. So many realtors really have no knowledge of what goes on the mortgage end.
Right.
The contracts, they find the house, the contracts get signed, and they're like, okay, I'll see you in a month and a half when we close.
Right, and they don't even, and they don't even think to, not that it's the realtor's business to ask, but, you're in the middle of a pandemic and you know that your client is a DJ or owns a restaurant or is self-employed, and, these are things that hit you as red flags, and you're like, wait a minute, is this,
right.
This pre-qualification is from before the world ended. Like, are you still, are you still qualified for a mortgage before I show you 8 houses and put in offers for you? And then, inadvertently, whether you like it or not, your clients become, a reflection of you, because there's no one else to blame.
Right.
So you didn't pre-qualify this person. You didn't tell this person they were qualified if they weren't. But if you bring them to the house, now how many times did your phone ring last week?
Right.
When we were scrambling to get a problem deal done, which we got done. I mean, everybody's looking at the realtor.
Right. It's always if you gotta yell at somebody if it's not working out. So it's either you. If they're not yelling at you, they got the mortgage guy to yell at.
Yeah.
And if you're doing both ends, you're gonna get yelled at twice, which we were lucky enough to get.
Yeah. If you're involved on both sides, you take the brunt of it. And it's, I mean, it's definitely challenging. And when people look for experience and stuff like that, I mean, they say an average realtor on Long Island closes between 4 and 8 transactions a year.
Right.
So there are realtors out there that aren't even sitting at the closing table once a month.
Right.
So when someone says I've been doing this for 10 years.
10 years, but how busy are those 10 years?
How busy have you been on those 10 years?
It's really how many transactions you're doing.
What have you closed? Because we've been fortunate enough to grow. I mean,
Yeah, I mean our success. I mean, a lot of work and everything, but it's definitely been a lot faster to where we are now.
Yeah.
We've definitely gotten there a lot faster than many people in our.
We've almost seen it all. You're never going to see it all.
There's always something new.
There's always something new as we'll learn. But I mean, you have exposure to 3, 4, 5 transactions a month. That's different than 30, 40, 50 transactions a month.
Right.
And then being able to handle everything and being able to juggle everything and make sure everyone is happy. I mean, that's something that I think me and you both kind of excel in.
Right. No, you definitely. There's no way to even get around that. Like you have to be so diverse, and so we have a couple questions I wanted to bring up, especially for the first-time home buyers, especially being at the bank.
Using your cheat sheet.
Using my cheat sheet to make sure we hit the key points. So everybody knows that is looking for a house. They have the one question in mind. Every single person has the same question. They don't even want to know anything about the bank other than what's your rate? What's your rate? What's your rate? So obviously we have our way of going through it, but when people ask you what are rates, like what are rates at Cardinal right now, and
if someone really presses me for an interest rate, I tell them the truth. I closed 2 loans last week. One was at 2.5%, one was at 4%. So you're gonna be somewhere in between there, right? But there are reasons that an interest rate, is more expensive or is cheaper or is lower or is higher. So when, without asking you questions like, how is your credit? What's your debt to income ratio? Are you going to be occupying the home? Is this a second home? How much money are you putting down? What's the LTV? Have you had any bankruptcies? Do we need to go FHA? Are you a veteran? Is this a USDA loan? I mean, there's literally 50 to 60 things that would sway your interest rate. And when people say like, I have a 780 credit score, what's my rate? I mean, when I first got into the business, I was told to, quote them on a rate based on something, and then after you run everything, you could tell them. But I tell people now from the beginning,
right? Because I remember I used to ask you that every day.
Right.
I had clients I was bringing you, for a mortgage, and my only question would be, "What's today's rate?" And you would look at me like every time, like, "Dude, I told you the same thing yesterday."
Yeah, it's not chicken on sale at the supermarket. How much is it a pound today? It's it's $4.99. No, it's
there's so many variables, and people think they see on Chase Bank, we're advertising 2.95 today.
Yeah, and then you read the fine print.
And then you read the fine print, and that's if you have the best credit, if you have 840 credit, and you have, you're putting down 50%, and
and people still think that we're in the world of like, I'm gonna start here, and then you're gonna come in here, and then we're gonna meet you in the middle. Like we're not negotiating an interest rate.
Right.
Like we have competitive rates, and we are as competitive as we possibly can be, but there are costs associated with the process, and nobody works for free.
Right.
And you also want to make sure that you're in good hands when you take out a mortgage, because this is a $500,000 purchase. So if you're trying to save $50 on a title fee, that's those aren't the type of questions that you should have when you're
making the biggest investment of your life, right? Probably.
Because I just closed a $615,000 loan, and the borrower didn't tell me, and it was a really troubling loan, but the borrower didn't tell me until after we cleared the loan that the guy that I came to before you said that he couldn't do anything more than $525. So there was a reason for that.
Right.
So the kid wasn't going to be able to buy the house that he wanted unless we were able to get it done for him. And maybe, I don't know. I don't know what his interest rate was at the other bank. But, if you're putting down 20%, if you have 780 credit, if you're buying a single family home, if it's in New York, your interest rate is going to be, as of today at 6 p.m., your interest rate's going to be in the high 2s or low 3s. But the market swings more every day now than it used to swing in, over the span of months.
Right.
Like a rate environment used to last 3, 4, 5 months. No one was looking at the 10-year bond. No one was trying to figure out if the stock market's going up today, are the rates going to change? Now it's changing by the day. It's really changing by the day.
So like when you're pre-approving people right now, and they're obviously asking you, oh, what's the rate as of today? So you can base it off today. You can give them, okay, if we were to buy your house today, what your rate would be.
I always tell people, I always aim about 1/8 of a point higher than where I think they would be if they bought today. And then I tell them that if they find a house within the next month, that's most likely their worst case scenario. I said if you find it today, we'd be a little bit better. And that's the truth. But you can't, there are places that will pitch you at the bottom of the rate sheet, and the second you wake up and, and the president says something different in an interview, that rate's gone.
Right. And when you say rate sheet, that's one of the things like Cardinal offers, which I didn't know anything about until, getting into the business really. Most banks, you lock your rate. So if you go in and you're under contract and you're ready to buy your home and they say, okay, we're going to close in 45 days, they'll lock your rate today for the next 45 days, saying, okay, your rate today is a 3.5. You're good for the next 45 days. You don't have to worry about anything with the rate going up or down. I know with Cardinal is a little bit different how they kind of do the whole.
They give us flexibility to switch between Fannie and Freddie. So if something were to come up that would make you ineligible for a Fannie Mae loan, but you can still go Freddie, it wouldn't cost us money to switch anything over. We don't have to charge the borrower to lock it all. But more importantly, if to understand why moving along the rate sheet even makes a difference, you got to understand that there's a cost associated with every interest rate. So when people say like, all right, this person is offering me a 3%, so are they charging you any points? Are they charging you any origination? And what are the lender fees? Because if you're paying a 1% discount point, or you're paying a 1% origination point, or they're telling you, no, we're not charging you any discount or origination, but they're charging you $5,000 in processing and underwriting, all of that is cost associated with the interest rate. So when people are really trying to, when people approach me as if I'm trying to take advantage of them, I approach them and I say, well, what interest rate do you want? I'll give you whatever interest rate you want, right. And then I'll tell you how expensive it is. Because when you compare and contrast from one bank to another, you're not,
unless you're comparing apples to apples, you
right.
want to.
So the most important question when you're deciding on what type of loan to take out is not what your interest rate is going to be. What I tell people is, how long do you plan on being in this home? And is this a forever loan, or are we looking to refinance this, right? Because if you're getting into an FHA loan, the goal is to get out of that, because you're going to have mortgage insurance for the life of the loan. So why are you, if you qualify for a 2.875 with no points, right? Why are you going to spend $6,000, $7,000, $8,000 to reduce your rate? Because in 2 years you're going to refinance and you're going to
probably take it off anyway.
Right. So, on the other side, if you come to me and you say, listen, me and my wife are, we're scaling up, we're selling our house, this is our forever home that we're moving into, we're putting 20% down, and you qualify for 3%. Well, listen, if a 1.5% discount gets you down to 2.5%, you're going to make that money back in 3 years. And this is a 30-year loan.
Right. So
it's going to make sense if that's what you really feel like is going to happen.
I feel like once you put it down on paper and people could honestly see the numbers, that's, what they're paying for. People realize it's not just the rate. You're buying, who's doing the mortgage for you. Right. They're going to explain everything to you. So when you see it on paper, it really starts making sense and the whole package kind of comes together. Yeah. Rather than, oh, my rate's 2.75. Oh, but this bank's going to beat you by 1/4 of a point. Listen, customer service and equals something also. Understanding why you're getting what you're getting, and not just, oh, it has a 2 in the front, or why am I getting something in the 3s?
Right.
This bank say 2.99, you're giving me a 3.
Well, why? What about this? We've seen Quicken. Quicken was offering a client, the credit score was wherever the credit score was. Quicken was offering them a 3%, and we were telling them that 3.25. We were giving them 3.25. We told them that we were a better bank to deal with regardless. And then they sent us the loan estimate from Quicken, and Quicken wasn't charging them any discount points.
Right.
They were charging them a 2% origination fee.
Right.
They said, but Quicken's not charging me any points. All right, so what do you want to call it? We'll call it whatever you want to call it.
Right.
And then we'll charge you $9,000 too. And then we could give you a 2.75. So
So a lot of banks try to hide things in different ways, and then for a buyer that's doing it for the first time, even for someone that's probably done it more than once, if they don't know what they're looking for in certain spots, they could definitely be taken advantage of, as you know.
Right, and it's, you know, having somebody explain that to you. I mean, I would say I spend a good half of my day working with first-time home buyers, and that's why I told you I wanted to create a website where we would maybe explain everything and take an hour or two on the website.
This is, you know, it's very important for first-time home buyers. You're getting into something that's going to be your biggest asset, the biggest purchase of your life up to this point. And they have no idea they don't understand the ins and outs of anything. They kind of just look at what the interest rate is, and they think that's it. Yeah, and you know, when you talk to them, you know, a lot of the times, like, you can tell which ones are repeating questions from their parents, or you could tell which ones are, you know, I don't want to have a prepayment penalty. Well, those haven't existed in 7 or 8 years. Yeah. So that's, you know, that's a question from the parents, right? Or, you know, is this rate fixed or adjustable? Like, maybe you've seen that on Google, or maybe, you know, but we don't do adjustable rates, and we don't do prepayment penalties, and, you know, anything that you do with us is either a 30 or a 15-year fixed, and it's you know, it's the right type of loan. But again, how long are you going to be in the loan so that we can structure it out the right way? Right, and when you're structuring it, a lot of people always have the misconception, oh, but if I put down more money, is it better to put down more money? Is it better to put down less money? Does it really make a big difference? I know on the real estate side, at least, when we make offers, sellers like to see more money down on contract. You know, to them, it's like, oh, they're taking a smaller mortgage. Even they could be qualified or not qualified. You know, they don't really know the ins and outs of why they're putting down this money. Right. But they just see it as, oh, this guy's putting down $20,000. This guy's putting down $80,000. I'm going to go with the $80,000 offer. Meanwhile, maybe the $20,000 offer is more qualified and solid, but they're putting down less money. Right. So you would much rather do a 5% down loan with a 30 debt to income ratio than a 20% down loan with a 49. Because that 49 is going to squeeze through, and that 30 is going to, you know, you're not even going to hear about it. It's just going to close by itself. Right. So the realtors ask the wrong questions, and you don't anymore because you understand a little bit more. Now that we learned. But, you know, when someone says, like, oh, what are you putting down in contract? $50,000. Okay, that's great. The house is $500,000. You're putting 10% down in contract, but that's a $450,000 mortgage. How qualified are they for that? Right. Because someone might be putting down $20,000, but they're way more qualified for a $480,000 mortgage. Right. So I've had realtors call me and ask me questions, and some of the realtors know what they're asking, and if they believe what I tell them, then it really works. You know, if the client is qualified and what are they really looking at? Like, they're really asking what their, like, debt to income is to see, like, how tight those numbers are to make sure, like, it'll be a clean coast. Credit score, debt to income, and work history are going to be the three things that you want to look for. Especially work history, with what's going on now. Everything going on. So, you know, when people say how much money should I borrow, I mean, it all, you know, when you're going into an FHA loan, your mortgage insurance is one size fits all. You're paying the same premium no matter what. So to think that you want to put down anything more than the minimum on an FHA loan, I don't see it, right? So if you're buying a $400,000 house and you're going to put down $20,000, now your mortgage is $380,000, right? Or you're buying a $450,000 house, you're going to put down $20 grand, now you owe $430,000. Right. So the money is at X amount of a percentage, 2.875, 3%, 3.125. So why, you know, oh, I want to put down 20% so that my payment can be lower. Well, then why don't you put down 25%? Why don't you put down 40%? Or why don't you put down 10? Like, you're paying the same percentage on the money. Now, if that money stays in your bank account, it can be used as anything from a nest egg, which to me is more important than saving $100 a month. Yeah, because basically, so mentioning that $100 a month, like, how much is $100 a month? So if I needed to raise my offer or take my offer down payment lower, how much is that $100 equate to on the purchase end? So in this rate environment, it's probably a little bit better, but we would always say $20,000 in loan is $100 a month. Okay, so basically someone that's putting down $20,000 total, or someone that's putting $60,000 total, you're basically looking at about $200. Right. But that other person also only has $40,000 less in the bank now. Right. So if they could use that $40,000 to pay off a 10% or 15% credit card or a car, that's buy an investment anything that's basically more than the interest rate on the home, you're better off putting down less and paying off the debt. Yeah. I mean, the equity is going to build, especially in this type of market. So, like, you put down 10% now, and then in 3 years, you know, you've paid off 5%, and the house has appreciated 5%, and it disappears. But you put down 20% or you put down 30%, and then you need money for something, God forbid, you can't get it out of the house. Right. It's not there. You know, you can't cash out more than 80%. You put it all into the house.
So, I don't drill that into people anymore because I just understand that some people are very old school
and they just want to put down the 20%
I
or
want to
what
put down
it
the
is.
20%. I don't want to pay mortgage insurance. If you have a good credit score and you put down 10%, your mortgage insurance on a $500,000 loan could be $80. Right? So if you don't think that $50,000 in your bank account is worth $80 a month, that's eventually going to disappear anyway, then it's, it might be a mindset thing, or it might just be, it's old school, or, but to me, you're taking out a mortgage, right? You have to be comfortable with the monthly payment.
Exactly. So if someone thinks I could afford $2,800, but if I put down $40,000 more, it could be $2,600.
Right.
But they really just have to understand I could either have a lower payment, but I'm going to have that extra $40,000 in the bank regardless. So
for anything,
if you need that $200 extra a month, you're still going to have that money
for the next 20 years.
Whatever else you need. So it's not like you're going to have that money and it's gone.
Yeah. I mean, just realistically, right? $200 goes into 40,000 how many times? 5 times 4, 200 times.
Right.
So you could set up that extra 200 to come out of your account, and now you're good for 20 years.
You'll be good for 20 years before you really have to touch it. Before you have to worry about having another payment.
So to me, I mean, it's just when people say it, and then I explain it to them one time, and they're like, "No." Usually, I talk to my mom, or then I just
they just have it built in their head. 10%, 20%. That's just what you do.
That's what you have to do, and then I back off. But I do mortgages for a living. I put 5% down when I purchase a home. But what do I know?
Yeah, exactly. What do the people that do it for a living know?
What do these guys know? No. I really feel like I should get asked that question a little more. Like, what would you do? No one ever asks me what I would do.
Right. Because they think you're always out just for yourself. I feel like a lot of people they don't understand.
But what do you think that if?
Because they think we make so much more money. Oh, they don't realize what goes behind the scene. If I borrow more, I borrow less. They're like, oh, but you're just doing it because you want to make more money.
Right. The bank makes money off the interest, and then but I'm not the bank.
Yeah.
I'm not. I don't get paid on the money that you owe. I originate your loan, and then I hear from you whenever you want to refinance, but I have nothing to do with servicing your loan. So.
And I guess with rates where they are now, obviously it's a great time for buyers to buy. Everyone's very happy. The lowest rates we see every day on TV. Lowest rates they ever been in how many years? Do you think that they're going to stay where they're at for someone that's looking to sell their home or buy a house? Do you think the rates are going to stay where they are? Do you see them going up, going down?
No, they're going to change.
What are they saying?
You have to buy or refinance today. You have to do it. You have to. No, I don't know. And nobody really knows. Projected based on the economy and the few people that I know that I feel like know what they're talking about. And I think they're going to be here for a little while.
You might hear people saying, "Oh, they're going to be here for they're saying at least 2 years. They're going to be here at least another year." But then people are saying, "Oh, I heard the rates went up this week," and then other people are saying, "Oh no, they've been staying the same," but they did go up this week.
An APOR stands for an average prime offer rate. That means that if you have a 780 credit score and you're putting down 20%, nationwide, the average person is receiving a blank. Right now, maybe it's 3.03, right? 3.03. If that changes by 0.01, you'll see a newspaper article the next day that says rates are hiking, rates are ticking up. You wouldn't even be able to notice it in your closing costs or in your payment. It hasn't even moved an eighth of a point. But people get so hung up, rates are low. What are they going to be tomorrow? Maybe a little bit lower or a little less lower, but they're low. Right? So until you see newspaper articles like we did in 2016, like Jesus Christ, you missed the boat, like you really screwed this one up.
If you didn't get in on it right now, you're
done. Now is a good time to buy a home. I mean, think about it. A good interest rate was 4%. Now a good interest rate is 3%. That's 1 full percentage point on, let's say, $500,000. You're saving $5,000 a year for the first, let's call it 5 years.
Right, because everything's obviously in the front.
Right. So if you're going to save $25,000 in interest just in the first year alone, maybe you're going to spend an extra $10,000 more than what the house is worth because of the way that the market is.
Right.
But it's still worth it. Your money's being made back in a year, and then you have plenty of time to recoup those losses. So, to think that, I know people that have literally been sitting back for 10 years, like waiting for the market to crash, waiting for a correction, waiting for this, waiting for that. They're going to get pushed out of Long Island. You're gone.
There's no way about it.
No. There's no inventory. There's so many people that want to buy that are qualified, civil servant jobs and police officers.
We're dealing with that on a daily basis. We're putting in offers for clients, and there's 20 other offers. If they're interested, 20 other people are interested, and it's just like they would do
to qualify you for
the
loan
house.
Truly, right? And give you a commitment. We are committing to lend you money. as long as, if a conditional commitment is issued because they need to wait for the title or the appraisal.
Right.
But they're saying, based on what you showed us and based on the documentation you've submitted, we are committing to lend you money at this rate for this vote.
So basically, like that paper can almost be almost like paying cash. It's basically saying, you don't have to wait 30 days to get the commitment letter. We're basically giving you our commitment letter ahead of time, pending the title is clear and the appraisal comes back at what we needed to. We can go to the closing table.
Right. So we, our buyers, especially if their situation is a little bit hairy, because we don't want to take chances or find out later on that their income was declining. So we get everything: pay stubs, W-2s, bank statements, and we have the underwriters verify their income, their assets, and everything. Are there large deposits in the bank statement? Was this mattress money? Or, is everything seasoned and is everything clean? Has their employment changed? So the underwriter will go through all of that before they even find a house and give them a commitment letter. And it says it clear as day, this is a pre-approval. This has been reviewed by underwriting. This has been verified, income, assets, and employment.
So that's really like having a big extra step than your standard pre-approval that every bank is giving you, that maybe they ran credit and they asked for some type of documents. But half these companies I see don't even ask for any of their documents. They run their credit and say, how much money do you make weekly? And they just plug it into the computer and they send them a pre-approval, and then they wait till they find the house and then they'll ask for all the real documents.
Right. Well, do you want a personal check or do you want a bank check?
Right.
Do you want a piece of paper that says that all that it really proves is that you have a checking account? Or do you want something that says, this is really what I have in my checking account? So I think that's like a really good comparison because it's been verified.
Right.
A bank check, that's the real money. A personal check is...
Probably should have left that out, because now all these other people are going to start doing it, and I'm going to have to go against them also on the real estate side.
Not every bank does it. So it's, we're lucky enough to work for a bank that's very corporate and very mom and pop. Like, we have an Eastern division, and now there's about 14 or 15 offices up and down the East Coast. But before we moved from our previous bank to here, there was no banks.
Right.
So we're a division. I'm a branch inside of a division inside a multi-billion-dollar bank that's owned by a hedge fund and a publicly traded real estate investment trust. So, I've heard that, what happens if this bank goes out of business? It's not. It's not going out of business. If this bank goes out of business, we're right behind Quicken and Loan Depot, and
they're soon to follow.
Yes, yeah.
For it to get that bad.
So that's that's one way that we help people, and then obviously advocating for our clients and calling the listing agents and saying, listen, I know these clients personally. I've been working with them for 4 months. It wasn't just a shoddy pre-approval letter. And I always ask the clients up front, how transparent are you willing to be with the listing agent? If they want to see your pay stubs, if they want to see your W-2s, I would recommend showing it to them because it's strong. And are you okay with it?
Right.
And they love that.
Well, I think that's why it's very important for a realtor to be involved with a mortgage broker, and because they kind of go hand in hand.
Right.
You can't do really one without the other, properly throughout the whole process.
Yeah.
So I definitely think it's for realtors, they go find whatever mortgage company you want to work with, find the loan officer that you want to use on the regular, and have one or two officers that you recommend on a daily basis that know what they're doing. They explain it the proper way to their clients and really know how to present your pre-approval if they have to speak to another agent about it.
And learn a little bit about it. And I've learned the same thing, and I do the same thing from when I was in the real estate business, but it helps to have a loan officer where if the client calls and says like, oh, we offered 500 but they want 505 and we're gonna sit this out. Maybe a little nudge from me that says, listen, in this market,
so you can break down the numbers for them.
Like understand that $5,000 is $20 a month, and also understand that your realtor is probably ripping his hair out trying to get you an accepted offer. And if he tells you that the house is going to appraise for 505, then you're paying market value for a home. And in this market,
right, people are thinking, oh, if I pay over what the asking price is, I'm technically overpaying for the house. Meanwhile, it's just that's what they're marketing the house for. Maybe it's $20,000 under ask.
Maybe it's over.
Maybe it's over ask. It's
right.
That's just a starting number that they're trying to get for. It doesn't mean.
And that's what your realtor is there for.
Right.
To comp it out and tell you what the house is worth. So don't look at the house and let your realtor do their job.
Right. Let them do our job and then you do yours,
right,
showing them the numbers.
Yeah.
So if people are looking now to get into mortgages, say they decide, I kind of like the mortgage side. What would you suggest for people to do if they're looking to get into mortgages, become a loan officer? Because, obviously I started to take the test, but it came to the point where I can't juggle both. It was either real estate or mortgages or real estate. And
that's really funny. I'm surprised nobody gave you the heads up that was going to happen.
Yeah, you did, but we just, obviously you say, oh no, I can do it, and after seeing all the files that you do, and you're literally in the office 12 hours a day, 6 days a week, always answering the call, you're not a regular 9 to 5 bank.
No.
So you could call, you could answer, anytime my clients had something that they needed, they call you anytime, you answer. If they needed an updated pre-approval, like, especially in this market, you got to be so quick.
Yeah.
You're always there for them, but that just shows how much time it takes to really do your job properly also.
Yeah, I mean, I have, my life is linked to my phone. It's I have my home office, I have my office. I would never even be able to go on vacation without a laptop. I mean, when I pre-approve somebody before I get off the phone with them, I let them know, this is not Chase Bank. If you have to call me after 5, if you have to call me on the weekends, I mean, you work 9 to 5. How are we gonna maneuver this whole thing? If, so I have to inconvenience you so that you don't inconvenience me when I'm earning your business by being available.
Right.
So to me, my 9 to 5 is processing and working with the underwriters and working with
moving the files along.
And then when everybody walks out of the office at 5, I'm like, well,
that's when you get started.
Yeah. Right. No, it seriously is. It's crazy that so many people leave before 5, 6, 7 o'clock, and that's why I've actually looked into marketing into California because
those extra 3 hours while you were there,
right.
It's 3 hours earlier over there, so I have plenty of time.
I could start prospecting at 3, 4 o'clock, and they're actually home.
Right. So I guess back to our question now. Someone that's looking to get into the mortgage industry.
What would I tell them?
What would you tell them?
I mean, I don't know. My boss told me for 10 years that I didn't want any part of this life, and there was a few times where I thought he was right, but. It's just something that you really have to dedicate yourself to, and especially in the beginning when, I'm lucky enough now to say that I don't market or advertise. It's all word of mouth. It's all
word of mouth. So just everyone being happy with the outcome, that you're always being there, and they just spread the word.
But before that, I mean, you really have to earn your stripes, and you don't start off making $100,000 a year.
It's just like real estate, basically. Everybody that gets their license think, all right, I got my license, I hung it up at my broker.
I'll do one deal a month.
The phone's gonna ring, and I'm just gonna keep making money. They don't realize that it takes a lot of time to develop. You got to get your name out there, and then it's doing a great job for that client who's going to tell the next client, who's going to tell the next one, and hopefully get that snowball effect and really blow up.
And you have to know what you're talking about. And that doesn't come, you can read as many textbooks as you want, but until you have X amount of conversations and really understand what you're talking about, they're going to know.
You can only bullshit so much.
Right. Yeah. But that's part of your job title when you first start. You know? And that's a great question. Oh, hold on. Can I call you right back? I just
got another important call. I'll call you right back.
And then you go to the manager's office. You find out what the answer to the question is.
Right.
But everybody's got to start somewhere. Everybody that's working for a living and is buying a house now, they started somewhere. But the mortgage business is fun to me. I always enjoy numbers, and I always enjoy explaining or educating and teaching people.
Right.
So it works for me. But I know people that would never want to do it.
Right. They started and they drop out. It's just not for them.
And I know people that I think should do it. But like my boss did for me, I'll never drag somebody out of their life. This is something that
they really want to do. You got to be, you love doing what you do. So it's not like you go to work every day and you're miserable.
Right.
You're making people's dreams come true basically at the end of the day.
Right. But if I show up to work and I don't make the right phone calls and I don't close any deals,
then we're having a different conversation.
Then I'm asking you to borrow some money.
Then someone else is sitting in this chair and I'm interviewing someone else because you're no good to me.
That's fair.
So obviously we could sit here for hours going on the mortgage end, what is entailed, how every step by step matters. But if somebody wanted to reach out to you, they had some more mortgage questions. Maybe they're interested in finding out if they could refinance, or maybe they're even looking to just purchase and they're looking to get pre-approved. Where can these people get your information? Where can they get a hold of you? Look up some of your reviews.
I mean, so I'm sure you're we'll put the cell phone.
Yeah, we'll put everything at the bottom once we're finished, so everybody can write it down and give you a call.
Yeah, my email and my email's available. I'm always on my cell phone. I'm away from the desk or I'm on the other line, so the cell phone is always the best bet, whether it's texting or calling, just to set up a consult or whatever you want to call it. We also have an online application, so like if you don't get home until late and you and your husband or someone wants to log online and fill out an application so we can go over it later. That's going to be on the landing page also.
Okay.
But I always say, like, we should spend a half hour on the phone together. I should take all of your information. I should let you know what to expect. I should tell you what I would do if I were you in your situation, and then we go from there. But you shouldn't want to spend $500,000 and let somebody handle that transaction for you if you don't spend at least a half hour talking to them.
Right.
You know.
Makes sense. I mean, basically, give you a call at the end of the day, have a 30-minute conversation. Worst comes to worst, you wasted 30 minutes of time,
right?
And it doesn't work out. But if it works out, it could be life-changing.
And that goes for refinancing too. I had somebody call me and tell me they didn't think it made sense to refinance because they had a 3.75, but their mom told me to call anyway, right? They had $2,000 in equity in their house. They were still in an FHA loan, and they had a $60,000 total credit card balance that they were paying 30% on. So we saved them $1,400 a month in total payments and interest and
everything combined.
Yeah, yep. And they almost didn't call.
Right. So worst comes to worst, it's 30 minutes lost, but if it works out, a lot to gain.
Yeah.
All right, good. So I would say we'll end up with that. So anybody that's looking to buy, sell their home, obviously you could always reach myself, Josh Handler, 516-732-6398. No matter the condition, foreclosure, short sale, we do it all. We have plenty of people that could answer the phone to put you in the right direction. Give us a call again, 516-732-6398. Thanks for stopping by the house.